Hi everyone, you're all very welcome to another weekend markets video here at the Alpha Capital Group. So today we're going to be looking at market volatility, looking across the board in all of the primary asset classes. We will be looking at dollar pairs, we will be looking at gold, oil, of course, with some of the fundamental news over the weekend, and we'll be talking about that shortly. And of course, we'll be rounding off by looking at European and US indices as well, broadly speaking. So I suppose first and foremost, to begin the week, we've obviously had that very, very shock news in the oil markets regarding OPEC oil cuts. Of course, the production in oil obviously being reduced, being cut back, which of course has seen oil prices shot up by $4 to $5 a barrel from Friday's close into obviously the early trading parts of this week and obviously today, broadly speaking. So of course, that's going to affect a lot of the markets in terms of stability. We did see indices initially sell off. We have seen, of course, the indices recover since then and really progress to new highs with S&Ps, Nasdaq, Dow Jones, and of course here in Europe as well with the DAX and the FTSE also leading the way much higher broadly beyond that. I suppose with other news as well, different commentary from Waller. Obviously quite mixed in terms of that. The Gundus commentary as well regarding CPI likely to decline in 2023. Again, a kind of a positive story for equities. And of course, we have obviously seen that being factored into the German DAX as well. And of course, as well, you will be looking at the economic calendar today, probably around 1:30. You will have seen interesting data points as well. So of course, looking at the economic calendar today between 1:30 and 2 o'clock, we've had weaker ISM manufacturing data. We've had Business Canada Outlook survey. And of course, we've had weaker PMIs in Canada and of course the UK as well, with Germany and European PMIs actually doing relatively well. Now tonight we do also have RBA interest rate decision. No rate hike is expected by the RBA. That is kind of what is currently priced in. So of course, if we do see 25 or 50 basis points coming from the RBA tonight, although we don't expect it, you would be looking for some fairly decent buying opportunities in the Aussie come 4:30 tomorrow morning local time here in the UK. Now, of course, obviously factoring that in. So we are expecting some volatility in the bottom half of Asia trading session tonight, and obviously, of course, into the European Open tomorrow morning. So if you're US based or Pacific based, you would be looking for some volatility in the early morning or early morning or late daytime, depending on the zones that you're obviously trading in as well. So worth keeping an eye on that, of course, in terms of a volatility, in terms of structural market sentiment as well, because I do think that is going to be one to watch this week, particularly if we do see a more hawkish move by the RBA, and of course seeing obviously interest rates continue to rise again. But at this moment in time, we do not expect that to be the case. Now, tomorrow as well, we do have Cook speaking in the FOMC. We do have Pill, the economic advisor to the Bank of the Governor of England, Governor Bailey, is also on the wires, as to is some trade balance data out in Germany. So not that much tomorrow in comparison to what we had today, or even what we had to some of the days last week as well. So of course, watching that as well very, very, very closely. And of course, then as we progress to Wednesday, we're going from the RBA in Australia to the Rbnz in New Zealand, which are looking for increases in interest rates. So you can see when you compare the Rbnz to the RBA, the Rbnz in New Zealand have been much more hawkish, have been much more aggressive in their increase in interest rates, as increases have gone from pretty much 0 to 4.75%, with another 25 basis points expected very, very late Tuesday into early Wednesday, of course, as we look at price action broadly speaking. So, of course, Governor Lowe, RBA speech, I think Tuesday night into Wednesday will be interesting, given the increase or potential increase that could be coming by the RBA tonight. Not to say that's going to happen. And also as well by the Rbnz statement at 2 o'clock on Wednesday morning as well. So we've got a couple of busy nights in the Asian markets, both for RBA, Rbnz, over the next couple of days. So, of course, being factoring in that there should be some fairly decent volatility, particularly if we see continued hikes or downside surprises as well. But at this point in time, we aren't expecting any downside surprises in terms of reductions in sentiment, given how, of course, the FOMC has raised rates again, and of course, given that the European central banks like the Fed or sorry, like the Bank of England, like the ECB, are still looking to increase their rates as well. Now, of course, that brings us down to really the business part of the week, the top end or bottom end of the week, really, with a number or a raft of US data out as well. We've got trade balance data, we've got composite services data, and we've got ISMs as well, PMIs. So worth keeping an eye on that, because of course we are expecting some fairly decent volatility on Wednesday with the economic calendar. So if you are a short-term trader, you are a scalper, you are a fundamental trader within the trading plan that you're executing, you should be watching these data points very, very closely, because you tend to get some fairly decent initial kind of 15, 20, 25, 30 point moves off of some of these fundamental events. So it's just about being aware of that, because of course, if you're scalping and you're getting in ahead of a position that goes against you, then you're looking to try and exit as safely as possible. And of course, in certain conditions, if it's very, very volatile, there is potential for slippage as well. So it's just about being aware of that if you are a very, very short-term time frame trader, or someone who obviously looks for quicks in and out positions in the markets as well. All right, so that then brings us to Thursday. Of course, Good Friday this week in a broader market. So of course, Europe is closed, the UK is closed, the Aussie is closed, the Kiwi is closed, Germany is closed. So we're expecting very little trading volume, of course, this Friday, of course, meaning bank holidays, which of course is a good thing as well. On Thursday, obviously in the European markets, and of course on Friday as well in the US markets as well. So Friday is Good Friday, Holy Thursday, Good Friday in Europe as well. So we are expecting a fairly reduced trading week to Monday, Tuesday, and really the early parts of, I suppose, Thursday, really, where you probably see the markets really tail off. So Thursday, we do have obviously weekly jobless claims, we've got Aussie data overnight, and then we have Canadian data to finish off the week. But I would suspect that for many markets, given the bank holidays that's coming up, you are probably going to see a slowdown in volume, fairly consolidated markets on Thursday and Friday. So a lot of the trading, the business end trading, will probably take place Tuesday, Wednesday of this week. All right, so that's pretty much the fundamentals. If we are to look at price action, broadly speaking, just having a quick scan through the markets, kind of just looking at broader market dynamics. Of course, firstly and foremost, we're starting to see that kind of consolidation really starting to take out in the DXY. So we've talked about this area around 102 into the end of last week. We did see a little bit of a bounce on Thursday into the weekly close, or weekly open, should I say, at 103 last night. But of course, the dollar weakness has come back in, given the orientation and strength of the indices, which we're going to talk about shortly, in the S&P, Nasdaq, and Dow Jones. Of course, with the correlations, stronger indice performance really generally means weaker dollar performance, at least temporarily anyway, where you will then feel that kind of filter back through into the FX markets, which of course should mean that a weaker DXY would be EURUSD higher, GBP USD higher, and potential for dollar yen weakness. So of course, as we look back into the FX markets, of course, from where we were on Friday, close into the early parts of this morning, we have seen that massive recovery again on euro dollar from 107.80, 108 back into this 109 handle, which is coming off now, which has seen a little bit of profit taking today as market dynamics, I suppose, erode a little bit. So very much keeping our eye on the pulse of this 109 handle, because of course the DXY break or bounce scenario here at 102 should really then give market participants a good idea of what the next phase of price action is going to do in the DXY, whether we see a rally recovery from 102 all the way back up into 103, 104 and Euro USD, GBP USD selling, or whether we see that breakthrough and ultimately we see further strength in Euro USD, in GBP USD. And of course, that is the big question now, because of course last week we posed the question marks to see where or what will we be looking for Euro USD, GBP USD at these areas. So 108.70 to 109, and of course on GBP USD as well, looking at this 4-hour area up here, which is starting to run into some headwinds given the internal break of structure today. We have come back into 124, 124.20, and we are seeing a little bit of profit taking. So again, it would be very interesting to see whether the DXY actually starts to rally off at this point, because of course, as I said, if we see DXY strength, we should be looking for some fairly decent selling opportunities here in cable and also here as well in euro dollar. Of course, let's keep an eye on that dynamic over the next couple of days, of course, into the Easter holidays that are coming up. Okay, moving across then to dollar yen, obviously with that weaker DXY today, that kind of pullback from 103 all the way back into 102, course, dollar yen has again moved lower again. So we've gone from 133.50 all the way back down to 132.50. A fairly straight line selling today. This kind of gradual chug higher that we've seen really since the middle of last week, kind of broader, kind of working ourselves higher continuously, has of course seen a fairly shift reaction today. We've broken through, taking out internal structure, and we are pushing back into the range. So again, worth keeping an eye on that to see how does the market dynamics play out, of course, this week, to see if there is a new low forming for price action to continue pushing higher, or if it's merely kind of taking of highs and lows in liquidity circumstances, only to kind of regurgitate and move back into this 132.90, 133.20 level for the markets to really unfold again back into 130. I suppose that's going to be the key deliberation this week if you are trading dollar yen. Now, last but not least, in the FX markets, we have finally seen Aussie USD break from the slumber because, of course, for the last number of weeks, it's held this kind of 67.20, 67.50 level with kind of fairly consistent selling off the region. And then, of course, with that weaker DXY, we have seen the Aussie really break through this range. We have seen some fairly decent buying opportunities tonight. And given, of course, as we said earlier, we do have RBA tonight, it will be interesting to see if the weaker dollar play today is a catalyst for a potential increase in RBA interest rates, which, of course, if we are expecting that, we could very easily see that continuation in strength in the Aussie dollar USD back into 68.50s, back into 69s, or vice versa, where we've now actually technically broken structure, where we get a short-term run in back into this region and then be nimble to see can the price action then extend higher, given it's taken out all of the liquidity over here, as we said from last week. So depending on whether you're buying or whether you're selling, just making sure there's very clear clarity in terms of what you're looking for, in terms of why you're looking for it, and making sure there's a clear process and a clear structure in mind. Once you have that, you will be logically over time more right than you are wrong. You'll have good risk management, you'll have good discipline, and you'll generally be on the better side of the market. So it's, of course, factoring that into consideration. Of course, with gold, as we move across the gold this evening, we've had that kind of gradual turn higher, kind of similar to what we saw with the Aussie dollar, kind of gradual turn higher. However, gold did get one final liquidity move off this 50 to 55 region we talked about middle of last week. And of course, we've seen since then that next run up higher, really back into this 1995-2000 level. And I suppose that's really been the two focal points that I've been kind of focusing on this week, is buying opportunities from down here in the 1950s or selling opportunities up here. Now, at this point in time, would it be a brave decision to sell gold, given the increasing in oil, given the commentary from the Indian government and how they are now offering trade settlements in Indian rupees rather than US dollars? So with that geopolitical risk, you always have that little bit of extra appetite for gold strength. So just be kind of wary of that. But of course, from a price action perspective, from a liquidity perspective, this area up here, as we said, around 1995 into really the highs at about 2002 should become a very, very critical area this week to see whether there is that kind of clear overriding break and run through that zone, or whether it's just mere politics in the back end to clear out the liquidity only for price action to then run lower again. And I suppose that becomes the angle that traders should be looking at this week. All right. Now, moving last into the commodity markets today, obviously we're looking at oil before we finish off with indices. Massive run up from where we were on Friday. So we talked about this area last week, 76 to 79 being very, very interesting area. You've got your mid-March lows from 76. You've got, I suppose, early March highs, should I say, from just underneath the 80 level. But of course, that massive gap, of course, with the fundamentals over the weekend has meant that oil has shot up from 75, 76, all the way up into this 80 level, where we are now attempting to break through this medium-term range where we've really been from December, January, February, and of course, factoring in that recent break to the downside at 65, 66, which has seen the oil prices pull back into this $80 barrel level. And I suppose that's going to be the key contributor this week. Do we see oil prices continue to turn higher? And given, of course, we have gapped up, if we are to look at where we gapped up to the open of today's candle, a mere 7.5% up on the weekend's fundamentals. So, of course, you have to be looking at that with a logical mind as well. So I suspect there's probably some guys with taking profits today if they were long oil. If there was any rumors last week, of course, they would be getting out of some of those positions today, given the 8% increase in the markets. So last but not least then is really looking at the indices. Broadly speaking, as I said at the beginning of the call, indices initially was lower. Again, kind of through the early hours of last night, there was a little bit of selling really into kind of London this morning from the Asia Open last night. So we went from 41.10, 41.20 on most exchanges, really back to kind of 40.90, 40.95. But we have seen that S&P climb again back into session highs into the close this evening in the US markets, and still full of life to the upside. If you look at broader directional bias, you can see very, very clearly what goes up must come down, as we are seeing obviously that clear reaction from this 4-hour daily liquidity area down here around 3,800, 3,850, clear run up again, takes out short-term highs obviously from last week, and again pushes higher. So the big talking point this week, given that we have that longer run up into weekend trading, particularly if you want to buy equities, is, are the indices going to close to new highs? Are the indices going to take out those kind of mid-February highs? S&P's around 4150, 4200. Given that we are not too far away from that now, we are trading still comfortably above 4100. Similarly, again with the Nasdaq, right? Do we ultimately allow for that kind of continuation? We have taken out the February highs. We're trading the highest part we've seen all year on the Nasdaq, or do we start to see a little bit of profit taking? Well, I think at this point it's interesting to wait and see. It's obviously very, very clear order flow. We've had a very, very clear run up in the NAS last week, as I said, into 13,000. It'll be very interesting to see if there's any sort of reaction or pullback to create this order flow trend-like structure. And for me, that area around 12.7 should become very interesting on the Nasdaq this week from a liquidity perspective. If you're looking at S&Ps again, as I said, order flow, very, very aggressive buying. We've just had clear pullbacks. 39.70 is obviously the last kind of major turning point. There has been a fairly significant run up since the middle of last week. We've gone from 39.70 all the way up to 41.20 roughly to where we're trading at today. But even still, from where we ran up this morning, or where we closed out from Friday at 40.50, there is a little bit of liquidity in here as well. So worth keeping an eye on that from a shorter time frame perspective. If there is any sort of dips, if there is any sort of regressional pullbacks in the markets, they do become very, very interesting areas, particularly if you're looking to getting in terms of buying opportunities. And last but not least then is really the Dow Jones, which has that supersonic break through this 32,700, 32,800 level we've talked about last week. Very, very clear jump and run into 32.9s where we were kind of closing on Friday. And since then, we are now trading another 600 points higher, as price action now is fully pulling back and mitigating this fairly decent break of price action that we've seen since mid-February, where we've topped up here at 34,200, 34,400. We had a very significant break all the way back into 31,500, and we're now pulling back into this previous range now. So this area here at 33,700, which is where we're kind of creating a little bit of a top from today, is interesting. But more broadly, I think you have to look at this area up here. And if we go to a 4-hour chart very, very quickly, you'll see the liquidity standpoint is really up here in this range, which, as we said, is going to be around 34,000, 24,200. So there is another 300-400 points of potential run up. Or it becomes a case of, well, if we're not kind of continually to kind of grind higher back up into these regions, then it becomes a case of waiting for the next pullback, waiting for the next dip opportunity, and carry that order flow trade to the upside, which at this moment in time is obviously still very, very much bullish. Lastly, but not least, in the European markets, we actually are starting to see in the DAX profit taking a little bit, obviously very, very clear range, that kind of diagonal dissecting bearish price action back into this 14,500 level. Last week, very, very clear initial run up, taking out some of these lower high order flow, coming back into this 4-hour area, which was mitigated beautifully at 14,800. And since then, we've had that very, very clear elevated run up from 14,800 back up into this 15,550, 15,600 level, which of course has come off perfectly today. Now, if you're looking at shorter term order flow today, you will also see range opened higher, obviously closed back underneath, breakthrough of internal structure, came back up into this area up here, as I said, around 15,650, 6,600. Very, very clear reaction. And of course, since then, we are trading about 100, 120 points off really highs from last Friday, and of course from the open this week, as markets have turned a little bit lower in the DAX as well. So that is something to keep an eye on, because of course, if the selling becomes more consistent and we break through 15,500, so you're really then looking at pullbacks. You've got a little bit of an area here around 15,300. You also have another area down here around 15,1. So they would become very decent downside targets should the selling become a little bit more visualized in these markets, broadly speaking. All right, so that's pretty much where we are this week, folks. Of course, all eyes on price action over the next few days. Paramount importance given the trading volatility towards the back end of the week with bank holidays, lower volume overall. Probably with the lower volume brings potential for more wicks and potential for more gaps, particularly if you are a cash price trader only. So just being kind of aware of that as well. And of course, as always, risk management and discipline becomes ever so important to make sure that you are on the right side of risk at all times. All right. So until later in the week, we will be back again just for a quick update, just to kind of round off the volatility with the next couple of days, and of course with the RBA, with the Rba Rbnz as well. So trade safe, everyone, and of course we'll see you all later.